Good evening and welcome to the Capital Market. I'm Edidiong Iwang. Well, it's been a very interesting week for the financial market, and these are some of the items in the news. Well, Tier 2 listed lender Union Bank PLC has secured $200 million in funding for investment in digitization on lending to small and medium enterprises and women-led businesses. Under the agreement, Union Bank will receive a 10-year term credit facility via a partnership with Sub-Saharan Africa Financial Services Group, Atlas Mara, in agreement with Overseas Private Investments Corporation. This is consistent with the bank's long-standing commitment to enable enterprise and empower women-owned businesses in Nigeria. Well, listed packaging company Better Glass says it has secured a fresh $30 million facility to be invested in the expansion of its furnace capacity located at Agbara Industrial Estate in Ogun State. When completed in June 2020 and operational, the furnace will increase the plant annual capacity by 35,000 tons and pioneer the use of narrow neck press and blow technology in West Africa. This will enable the company to bring lighter weight and non-returnable glass to the market in Nigeria for the first time. The new furnace, which will have a productive life of more than 20 years, includes an additional production line and improvements to existing lines, which will further enhance operational efficiency. The Nigerian Stock Exchange holds its 2019 annual general meeting in the week, where its full year 2018 financials were presented to members, showing a surplus of 2.70 billion naira despite a challenging operating environment. The exchange's total revenue declined 8% to 7.67 billion naira as investors moved towards more guaranteed investment asset classes, while revenue via listings fell 21% to 1.4 billion naira. The NSE generated lower transaction fees of 3.3 billion naira, indicating a 13% drop from 2017 period. However, the balance sheet remained strong with 9% growth in total assets as the group closed 2018 with total assets of 29.1 billion naira. About 4.1 billion naira was held in liquid assets with an accumulated fund of 25.9 billion naira.
Jolly good fellow, for he's a jolly good fellow.
Well, that was the closing gong of Monday's trading on the Nigerian Stock Exchange by the country's foremost accountant and founding member of the exchange, Pa Akintola Williams, who turned 100 years recently. The renowned chartered accountant, who is also the first president of the Institute of Chartered Accountants of Nigeria and Africa's first chartered accountant, commended stockbrokers for their efforts in building the stock market into an enviable institution. Pa Akintola Williams is the only surviving signatory to the original Memorandum and Articles of Association of the Nigerian Stock Exchange when it was established on September the 15th in 1960.
So long as the exchange exists, all of us who started off the exchange would do our very best to see that the exchange is taken care of.
That's Pa Akintola Williams. Now moving to the markets now, the Nigerian equities market suffered its worst week since April as the impact of the CBN's punitive measures on 12 banks for failing to meet the new loan-to-deposit ratio, which was previously 60% and has now been revised to 65%, weighed down on banking stocks. Consequently, the all-share index declined by 2.5% to 26,987.45 points and settled the year-to-date return at minus 14.1%. Meanwhile, a total turnover of 660.65 million shares worth 9.18 billion naira in 12,032 deals were traded this week by investors on the floor of the exchange, and that's in contrast to a total of 1.09 billion shares valued at 16.69 billion naira that were exchanged last week. Analyzing by sectors, the banking index recorded its largest decline since the week ended August 9 by 3.9%. Consumer goods lost 4.9%, while oil and gas shared 2.3%. 0.3%. On the flip side, the insurance counter gained 5.7% and industrial goods added 0.1%. Well, analysts believe the trend witnessed through the year is likely to persist through the final quarter of the year, but expect pockets of gains over the final months of the year as fund and portfolio managers realign portfolios before the new year begins. Now, moving over to unlisted securities, on Friday, that market closed lower by 0.78% at 699.67, and the market cap was at 502.64 billion naira. In all, just about 214,896 deals were traded. In 22 deals, I beg your pardon, and they were worth 14.85 million naira. Now, moving to the FMDQ market, trading in bond security secondary market was seemingly bullish as the average yield across instruments declined by 2 basis points to settle at 14.2%. Now, there were yield declines recorded across the market except on 8 instruments which recorded yield increases. Trading in the market is expected to be bearish, especially if OMO auction frequency declines. Now, moving over to treasuries now, the activities in treasury bills markets were also bullish as the average yield declined by 4 basis points to settle at 13.3% as investors took position in the secondary market given the significant level of oversubscription at the CBN's OMO auction. Now, analysts expect market activities in the secondary market to be bullish as investors try to cover lost bids and reinvest maturities.